A $479 million funding round, a Series G, led by the likes of Dragoneer and Salesforce, pushing Snowflake's valuation now up over $12 billion, making it one of the most valuable startups here in the Bay Area. And Snowflake CEO Frank Slootman joins me now exclusively here at One Market. Frank, great to have you.
Yeah, good to be here.
So storage technology built on the public cloud. We've talked to you before about this. Tell me, what's driving this Series G? You raised about this much money back in 2018, and you still got most of it, if not all of it, in the bank, right?
Yeah, that's correct. This really was not about raising money. This was about establishing a strategic partnership with Salesforce, and of course, the price of admission to do that is of course to for Salesforce to have an opportunity to benefit from that partnership as well. So that's really the pretext for what's going on here.
Now, last time we talked on Squawk Alley, if I remember correctly, you said that there was a window to go public before the election at the end of this year. You also said you'd consider a direct listing. People who've been following that know if you don't IPO, there's not the same money-raising opportunity at that moment. So one thing you might do is raise a big Series G, which you've done. Is there still the possibility to see you guys go public before the election?
Yes, there is. I mean, the two are really totally unrelated. We get a lot of questions, does this change the trajectory for an IPO? And as a matter of fact, it doesn't. So what I said before about the timetable and when we will or wouldn't go, all of that still holds. And that's why I said it's not really a traditional, fundraise. It's essentially a balance sheet transaction, right, from equity to cash. So.
Yeah. We're still seeing quite a few IPOs at the New York Stock Exchange, at the NASDAQ. Is a direct listing, kind of after all the VC buzz and meetings about at the end of last year, still as attractive an option to consider?
We're relatively indifferent to that. One of the advantages that I feel that an IPO has, it gives us an opportunity to really build our shareholder base as a public company. And those are different kinds of entities. Those are people that can hold multi-billion-dollar positions for a very long time, 5, 10 years, and so on. The IPO lets us direct the shares, whereas with a DL, obviously, it's a free-for-all. You can't do that. So there is aspects to an IPO that actually help us achieve those objectives.
Our Mike Santoli was just talking about Microsoft, which has been on an amazing run. Part of the reason why investors want to be a part of it is because of its position in the public cloud. Amazon recently reaching 52-week highs as well. All of them, including Google, have talked about investing in the Salesforce this year. They're clearly trying to drive growth. Zendesk, another cloud player, not in infrastructure, also investing in growth. What's happening here in the cloud in 2020 and this investment? Is there a specific kind of opportunity that players like you are chasing?
Well, it's a massive transition, right? It's not just a generational thing. It's the biggest thing, ever in the world of computing, where literally all workloads that have been built up over a 34-year period are now moving to the cloud, and it's going very, very fast. So it's almost hard for organizations like ours to fully usurp the opportunity that's unfolding in front of us. So that's why everybody's investing like crazy.
To hear you say that makes me think that we might still be undercounting the opportunity. When you say the biggest opportunity in computing, mobile was a pretty big opportunity. Now, granted, mobile and cloud are tied together. Even considering that, even considering things like open source that came before, you say this is bigger?
Much, much bigger. This is the entire computing infrastructure that has built up, since the 1950s and 1960s. Everything in the last century is now transitioning to the cloud, and there's less and less reasons to resist the cloud. I mean, for the last 10 years, we had the conversation about privacy and security and so on. It's going away because after a while, people are staring at each other like, what are we talking about? We have to go. Time is not our friend.
So how should investors analyze where the profit is going to be and therefore where the best investments are going to be cloud-wise? Because in the beginning, we talked a lot about infrastructure and kind of general storage. Now we're talking more about higher value software and services that sit on top of the cloud. What's your bet on where the value is going to be?
Yeah, clearly software has better unit economics than storage and servers. All things being equal, that's a better bet.
Therefore, do you think there's going to be consolidation where potentially the Microsoft, Amazons, Googles even ramp up their M&A activity to leverage their existing positions. Got to mention IBM, too, of course, with that Red Hat purchase, because this is that playbook. Leverage their cloud infrastructure positions, but also add to the profitability and round out the model?
Potentially. You would have to ask them, how they're, but what is going on is if you look among the big public cloud players, it's consolidating. So in other words, the market share of the top three is actually increasing. So in other words, it's not proliferating, it's actually coming together. AWS, Microsoft, and Google all doing well.
Finally, coronavirus, we've talked about in the context mostly of things like semiconductors, supply chain hardware. Is that having any effect on the cloud ecosystem that you can see?
Not at this point. There are peripheral issues. For example, we're having a big sales kickoff event in Vegas this week, and we thought pretty hard, whether we wanted people to travel and where to travel from. So it does affect us, but in the end, we decided to do it and pull the trigger. So it does preoccupy a little bit of mind share, but it's not the same as for other types of enterprises.